All right, traders, let's dive into why the British pound is gaining ground against the USD. Yesterday, the British pound edged higher, especially against the euro, as market volatility began to settle after several choppy sessions. On the economic front, recent UK data showed early signs of weakness in the labour market. This comes just ahead of a scheduled increase in employer tax this month. But despite these headwinds, the pound remains supported thanks to easing volatility and technical buying interest. Now let's talk technicals. The market has already taken support near the previous resistance zone around 1.3200, which has now turned into a strong support. So what happens if the price dips further? Here are the potential buy zones. First, we have 1.3125, a minor support that could act as the first bounce level. Then the stronger support zone lies between 1.3045 and 1.3035. This is ideal for a high probability buy setup. For an upside breakout, the market may need to consolidate first to build momentum. If you're already holding a buy position, it's advisable to continue holding unless the price shows clear signs of reversal. Remember to set your stop loss below the support zone or recent low. And for taking profit, you can either trail your stop loss or target upcoming resistance levels. In summary, GBP USD is holding well above the 1.3200 support. If the market dips, consider buying near 1.3125 or within the 1.304535 zone for good opportunities. For a breakout, wait for some consolidation. The current market bias remains mildly bullish. That's it for today. Keep your charts ready and trade safe.